Good afternoon, everybody, and welcome. I'm Leslie with the New Mexico Small Business Development Center, and I'm here with Peggy McDonough. And this is going to be a great informative webinar. Peggy's going to give us information on Are You Tax Ready? PPP, EIDL, and Employee Retention Tax Credit Implications for Your Business. I'm going to turn it over to Peggy, but if you have any questions, don't be shy. Go ahead and type them into the Q&A, and we will either pick up the questions throughout the webinar, or we'll have some time at the end of the webinar to answer all the questions that come in. So with all that, Peggy, I'll turn it over to you.
Thank you, Leslie. Good afternoon, everyone, and I want to thank you all for attending the webinar. As Leslie said, my name is Peggy McDonough. I am a SCORE certified mentor, and what SCORE does is they work in collaboration with New Mexico Small Business Development Center, and we provide small business owners with professional training and support. So today's webinar is an example of this collaboration, and we hope you'll find your time today productively spent and particularly important and useful to your business. So let me give you a little bit, set some of the administrative guidance here. As Leslie said, do not use the chat function during the webinar because we won't be monitoring it. Write your questions, and if you can, the slide number in the question and answer feature in Zoom. And we will address all of your questions at the conclusion of the presentation. So SBDC is prohibited from giving legal advice or tax advice. So any tax related questions or accounting questions or specific questions about your individual company situation can only be answered with credible authority by your accountant or attorney. So also please keep in mind, the information we're covering today is changing rapidly and is based on current understanding of the programs. It can and likely will change and has changed through the weeks that I've been presenting. And although we will be monitoring and updating this webinar as new information becomes available, please do not rely solely on this presentation for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. So what are the goals for today? Well, I'd like you to walk away from this webinar with a better understanding of the tax impact for various COVID relief programs that have been signed into law by Congress in the last year and a half. So we're going to start with the Coronavirus Preparedness and Response Supplemental Appropriations Act, quite a mouthful, that was signed into law in March 6th, 2020, and we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. We want you to leave here today more knowledgeable and with guidance on what questions you need to be asking your CPA, your tax attorney, or payroll professionals in order to make the best decisions for your business. I'm going to focus today on three specific programs. We're going to talk about the PPP, which is the Payroll Protection Program, the Economic Injury and Disaster Loan, which is also called EIDL, and the grants that are associated with it, the Employee Retention Tax Credit, sometimes called ERTC or ERTC or ERC. We're going to be reviewing the timeline and the background behind all of these specific programs. We're going to talk about the tax implications, and I also have some frequently asked questions. At the end of today's webinar, we'll be addressing any questions that you may have. So let's start down this line of progression of how we got where we are today with a lot of the money that has been funded by Congress. Started out on March 6th, 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriation Act. What this act did is it declared the coronavirus an outbreak a disaster under the Small Business Act. And this opened the door for the SBA to use its lending authority to make economic injury disaster loans for small businesses that were impacted by the pandemic. Just a few weeks later, we have the Coronavirus Aid, Relief, and Economic Security, or CARES Act, and it was signed into law. It created the Payroll Protection Program and provided nearly $350 billion, $349 billion for PPP loans. Then in early May, Congress provided an additional $320 billion in funding. For the EIDL, it introduced the grant to pay the SBA EIDL applicants in advance on their EIDL loans. Now, these advances were treated as tax-free grants and did not need to be paid back. But unfortunately, the funds were exhausted very quickly in early July of 2020. Then we have the Employee Retention Tax Credit. The Employee Retention Tax Credit is a fully refundable tax credit for employers that's equal to a percentage of qualified wages, which include your health plan expenses that eligible employers pay their employees. At the end of the year of last year, we have the Consolidated Appropriations Act, and it was signed into law. Now, embedded in that was some additional $900 billion in COVID relief, $300 in aid for small businesses. So $284 billion to SBA for first and second PPP forgivable small business loans, and also provided $20 billion to provide EIDL grants to businesses in low income communities. The following March, we had the American Rescue Plan Act of 2020, and that was $1.9 trillion. That was voted on March 10th, and it was signed into law by President Biden on the 11th. And among other things, it provides small business assistance, including specific programs for restaurants and live venues. So you can see as we progressed along this timeline, they kept appropriating more money as money was getting depleted. They also became more specific in what these grants could or could not do. In March 30th of 2020, President Biden extended the PPP application deadline by 30 days. So what does that mean exactly? And what is it like to interpret exactly what did Congress mean? Who is impacted? Well, obviously IRS is impacted. The Small Business Administration has been impacted, banks, CPA, business owners. Treasury and IRS tax laws and guidance have lagged because, as you know, Congress is very general in what it approves. It has to be interpreted and codified by the Treasury and IRS. And in some cases, they're confused and contradictory. They've introduced new forms, they have new applications, it's confusing interpretation in a constantly changing environment. And this has been going on since these acts were put into law. And they're still going on in some of the interpretations. So this means that you're going to have to deal with business situations and tax implications that you've never seen before. So let's talk first about the PPP, or Payroll Protection Program. Now, the PPP is a loan. It's designed to provide a direct incentive for small businesses to keep their workers on payroll, and it can go from 8 to 24-week period. There was the first draw that was part of the CARES Act, and those PPP loans can be used to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operation. But the money was scooped up by large businesses very quickly, leaving the small businesses unable to apply. In the second draw, which came with the Consolidated Appropriations Act in December of 2020, that allowed certain eligible borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same general loan terms as their first loan draw. The application time ended in May of 31st of 2020. So we're now in what we call the forgivable portion of that loan. So the loan forgiveness clause is a borrower can apply for forgiveness on their PPP loan once all loan proceeds for which the borrower is requesting forgiveness can be used. Borrowers can apply for forgiveness anytime up to the maturity date of the loan. And if borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred, and the borrowers will begin making loan payments to their PPP lender. To apply for forgiveness, please work with your PPP lender. Now, you can get free counseling and training events on this website, www.sba.gov. It's a great website. And there's also now something that just has happened here in the last month or so, and that is an ability where you can actually apply for the loan forgiveness online, you as a borrower. And it is for loans that are under 150,000. And you, what it does is you can get online and you can submit all of your documentation, and it cuts down the approval process to the average at this point is about a week. Now, the caveat on this is it's your lender that has to opt into this. For instance, big banks like Chase Manhattan or Wells Fargo, they have their own websites and they are not opting into this. This is for the smaller banks that just couldn't take the administrative overload. And it allows them to use this website, streamline the process, and get the money and forgiveness, or get the forgiveness out to the loan to the borrower as quickly as possible. It's a great program, and you can find it on this website. If your loan lender has opted into this, they should be contacting you via email. But you can also get on this website and find out if your particular lender has opted into the program. There are over 1,500 banks at this point, the last I checked. So I'm sure it's much more than that, because that's been about a week or two ago. Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. You don't pay taxes on the money that you receive. This loan is to provide businesses with the money to keep running and continue paying their employees. And it's never been meant to create a tax burden for businesses receiving the funds. With the passing of the Consolidation Appropriation Act in December, there was more clarity on how the expenses covered by a PPP loan will be treated. So previously, anything you spent your PPP loan on was not going to be tax deductible. Now, these expenses are tax deductible. So simply put, your PPP loans will not affect your tax filing process. Also, forgiven PPP loans are not taxable historically and forever. If you had a business loan and it is forgiven, that automatically is taxable income. It's been in the Internal Revenue Code forever. However, with the PPP loans, they broke from that code. Congress specified, and the IRS has clarified, that forgiven PPP loans will not count as income. And this applies whether your entire loan is forgiven or just a portion. This loan is to provide your business with money to keep running and not create a tax burden. So simply put, your PPP loan will not affect your tax filing process. So though Congress has walked back the IRS stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave those funds out of the conversation in your 2020 and 2021 taxes. Whether you see PPP funding in its first iteration or later on in 2021, you should still be careful when it comes to taxes. There are still a lot of unanswered questions. And some of these questions stem from confusion in the PPP application process. So in some cases, application woes meant the business received money that they weren't qualified for in the first place. For example, a company might have stated that it had employees when it only had independent contractors. And while that may seem like a case of semantics, that kind of difference could have major implications when it comes time to file your business taxes. Now, how funds are used is also important to keep in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So you need clear and concise bookkeeping. Your signed PPP loan contract stated you would produce monthly government-ready financials, and so you are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. Separate accounts help to identify your PPP loan. For example, other income, PPP loan, non-taxable. But it is important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. If you have received a PPP loan, expect a tax audit. In recent months, the SBA and the US Treasury have announced that PPP loans in excess of 2 million will be audited. Now, loans that are less than 2 million are subject to an audit, and much lower loans have been and will continue to be scrutinized, but there's a higher probability that the IRS will audit you. They even have the IRS has even created a hotline for anonymous callers to report possible fraud. So how do you help to ensure a smooth audit process? Well, please don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and your PPP documentation should be kept on file for at least 6 years after your PPP loan is fully repaired or forgiven. Always make copies to send, but retain your originals. And most important, hire a CPA who can represent you and defend your business against IRS if necessary. So here are a few of the frequently asked questions. Does my PPP count as taxable income? No funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will also be able to claim a deduction for your expenses using your PPP funds. But what if my PPP loan is not forgiven in full? Does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. Even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? No. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent or lease payments, or mortgage interest. PPP loan proceeds can't be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Will PPP loans be audited by the IRS? As I said, according to the US Treasury, all PPP loans that exceed $2 million will be audited. The IRS may audit all other loans, so it's always best to be prepared, even if you received a much smaller loan. Now, one of the things that is important to ask your CPA is, does your state tax forgiven PPP loans? In New Mexico, as you can see, we're green, and forgiven PPP loans are not taxed at the state level. And of course, they're never taxed at the federal level. There are some states that do that, but in New Mexico, we're okay. They don't tax them. Now, check with your CPA just to confirm this, because of the fact that tax law changes and shifts and interpretations. So always check first with your CPA to make sure that that is still true in New Mexico. The next program I want to go over is the EIDL, which is the Economic Injury Disaster Loan. Now, the EIDL is a loan option, and it's available through SBA to help businesses struggling with financial hardship due to COVID. Now, as you well know, the PPP, you go through a lender, then the lender goes to the Small Business Administration, and that's where the funding comes from. With EIDL, you work directly with the Small Business Administration. And though SBA disaster loans have been available for years, the EIDL was signed into law in March of 2020 as part of the CARES Act, which was passed by Congress to provide emergency relief to American workers and small businesses that were struggling with the pandemic. So if you are a small business, a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that has suffered substantial economic injury as a result of the COVID-19 pandemic, you can apply for the COVID-19 EIDL. These loans do not go through a lender. They come directly from SBA disaster assistance, and there is no cost to apply. And you can contact and see the information on this disasterloan.sba.gov site. And this presentation will be emailed out to you. So you will have access to these particular websites. Now, the EIDL's a loan, and it's treated the same as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. Now, the EIDL loan itself comes with several grants. Now, small businesses impacted by COVID-19 might be eligible for what's called a targeted EIDL advance grant up to $10,000. They also may be eligible for an additional supplemental advance of $5,000. So you could, if you qualify, get a total of $15,000. And these grants do not have to be repaid. The SBA is now encouraging all eligible businesses to apply. So unlike the PPP, which ran out of money and is no longer an option, the EIDL grant still has money and options available to small businesses. But let me also qualify this at this point. Congress is in the process of working on an infrastructure bill. Now, one good thing for us, Congress moves slowly in approving these things. But the bad side of that is the fact that inside that bill, there is a plan to sweep up any appropriated funds to the EIDL grant program and the EIDL loan program. The EIDL grant program, sweep all of those up and push them towards and put them towards the infrastructure bill. So if this is something that you do qualify for, and I would highly recommend that you get your applications in with SBA as quickly as possible. And I'll go over here in a minute how you do that and how you can, and if you do qualify. We want to make sure you get in line and in the queue before Congress takes what funds are left and appropriates them towards the infrastructure bill. Now, the grant program was part of the initial CARES Act in 2020. But as I said, the funds were exhausted within weeks. So Congress allocated additional funds for the program. And they also narrowed the criteria. So smaller businesses were more eligible and the big businesses couldn't come in and take all the money. But to be considered for one of these grants, your business must meet eligibility requirements and apply. You have to have applied for an economic EIDL disaster loan. Again, you can do that on the SBA website. However, and this is the important thing, you don't have to get or accept the loan to get the grants. You just have to be qualified. Yeah, what did I do here? There we go. So let's go over some of the definitions. The amount, what is an economic loss definition? That's the amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. And so how do you demonstrate an economic loss? Well, you get your business tax documents organized and up to date. They'll be essential for applying for this grant and demonstrating whether you qualify. Well, what exactly is a low income area? The SBA has released an online tool to help borrowers understand if they are in a low income area, because that will qualify you for either the targeted or the low income or supplemental. And this, what this does is it looks at your address where your business is located, and it will tell you whether you are in a low income area and whether you qualify. So if you get online, if you get on the SBA.gov website and you type in your zip code, it will show you a map, and it's very specific as to which areas qualify for this low income targeted grant. So what are the new 5,000 supplemental grants? Well, the American Rescue Plan in March of this year included $5 billion in funding for supplemental targeted grants of 5,000 to the hardest hit businesses. And how do you qualify? Well, you have to have suffered an economic loss of greater than 50%, and you have to employ not more than 10 employees. And as I said, this supplemental grant can be in addition to the 10,000 targeted grant. So a total of $15,000 could be available. The SBA will reach out to small business owners who have applied for the targeted advance if they appear eligible for the supplemental grant. Getting your business tax documents organized and up to date will be essential applying for this grant and demonstrating if you qualify. Now, what are the tax implications? As there always is. Initially, the funds from the EIDL advances were not to be reported as taxable income, and this decision were to be reported as taxable income. And thank goodness, this decision was reversed under the Consolidated Appropriation Act. It now does not need to be included in your taxable income when filing your taxes. Additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies the EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and the EIDL grants will not be deducted from your PPP for loan forgiveness purposes. And that's an important statement again. The EIDL grants will not be deducted from PPP for loan forgiveness purposes. So please check with your tax advisor about any tax implications at the state or local level. Will EIDL loans be audited? When you receive your EIDL loan, you agree to spend the funds provided for certain business expenses. And as part of your loan agreement, you agree to maintain your records, provide these records to the SBA to be audited if necessary. Now, while there is a chance you may not be audited, don't skip this critical step, and please maintain your records and be prepared to respond if an audit occurs. Now, I'd also like to interject that there's something that just came out here recently in the last couple of weeks. They've improved the EIDL program. They've increased it, and they call it EIDL 2.0. Now, with the original EIDL fund, the cap was at 500,000. They've now increased this cap to 2 million. They've also expanded how you can use those funds, and they've streamlined the review process. So they've done a lot of good things in the so-called EIDL 2.0, and you can find information for that again on the SBA website. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. And how do I qualify for a targeted EIDL grant? If you previously applied for an EIDL, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for EIDL, you can do so at sba.gov. If your business appears eligible, you will be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest loan rate loans through December 31st, 2021, as long as funds are available, and they are available right now. If it appears your business also qualifies for the targeted advance or supplemental advance, the SBA will invite you to apply. Can an EIDL loan be forgiven? No. EIDL loans, not advances, must be repaid over 30 years. So unlike the PPP loans, there is no forgiveness process for these loans. Now, I will say that there has been talk at Congress. Chuck Schumer has mentioned that maybe we should be looking at the EIDL program and treating it so loans can be forgiven. But at this point, it's just talk. Can I apply for a Paycheck Protection Program? Yes, Paycheck Protection Program loans, the PPP loans, can be fully forgiven if they are spent on certain expenses, which is essentially turns them into a grant. And then note that the PPP loan program is closed. However, if your business received a PPP loan, you may still be eligible for an EIDL loan and or grant. Businesses may apply for both PPP and EIDL if they qualify. Again, the PPP is closed down. So those are two of the loans programs that are out there. Now I want to talk about something that I think most businesses can use, and it's out there, and I would highly recommend to any business loan owner that they take advantage of this program, because again, there's a lot of money going into this, and there's been talk at Congress to ending this program and sweeping up whatever funds are left or that they don't have to give out to this infrastructure Act. So the employee retention credit is a tax credit. It was first put in place last year, and it was supposed to be a temporary coronavirus relief provision to assist businesses in keeping their employees on payroll. So you have two of these programs. You have the ERC and the PPP that focus on payroll and keeping your employees paid. But since then, the ERC has been significantly expanded. And in the most recent relief bill in January of this year, the ERC has been extended for all of 2021. And there are significant differences between 2020 and 2021. In 2020, you had to have 100 or less qualified full-time equivalent FTEs. In 2021, it was up to 500 or less qualified FTEs. So it expanded it on the employee side. On the tax credit side, it also was expanded. In 2020, it was 50%. You could get a tax credit up to 50% of $10,000. But in 2021, that was increased to 70% of $10,000. So there was some really good changes in the law. The credit is available to businesses with fewer than 500, again in 2021, or 100 in 2020 employees who either suspended or partially suspended their business due to COVID-19 because of a government order, which I think qualifies a lot of businesses, or they experienced a 50% or 20%, depending upon which year, decline in gross receipts when compared with the same quarter in the previous year. Please note that this is not and, this is an or. You can qualify under either one of these. There were a series of New Mexico government health orders in 2020 and 2021, and each order was effective for different dates, different businesses. So for details on who was impacted and the dates when the orders were effective, you can go to the newmexicohealth.org website, and it will give you a listing of all of the various orders that were put out by our governor. And you can see which ones you fall into and what dates you fall into them. Now, the nice thing about this particular program is the tax credits are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar for dollar basis. And the tax credit is calculated per employee and is 70% in 2021 of up to $10,000 in qualified wages paid per quarter. Now, qualified wages include the portion of your employee's earnings you pay and is reported on your IRS Form 941. Now, is this credit taxable? Well, yes and no. The ERC credit is subject to income tax. Wages on the claim credit must be reduced by the amount of the credit, which kind of results in the credit being taxable income. Reduction in wages may also impact Section 199A eligible wages for purposes of the 20% qualified business income deduction. If the credit is claimed on your 2020 payroll taxes, after the tax return has been filed, an amended income tax return may be required to accurately exclude wages that were deducted by the ERC. And most important takeaway from this slide is there are no double dipping between PPP and the ERTC. And I'll give you an example on this. So here's the first example. This is completely a theoretical company, one that came right out of my head. So this is not a real company. But the name of this company, imaginary company, is Star Technical Support. They're a small business and they reside in Roswell, New Mexico. So when they compared their Q2 of 2020 to Q2 of 2019, Star experienced a 55% decrease in their gross receipts. Now, in order to qualify in 2020, a greater than 50% decrease must be met, and they met that. So this business qualifies for the 2020 ERTC credit. In Q2, Star also received a $12,000 PPP loan. So Star Technical has 5 employees, and each full-time equivalent employee is paid $8,000 per quarter. Now, this includes their health insurance benefits. In Q2 of 2020, Star paid their employees $40,000. That's the 5 employees times the $8,000 equals $40,000. Now, in 2020, they could take 50% of their qualified wages. So 50% times 40,000, which qualifies, is equal to 20,000. But they have to subtract what they receive from their PPP, which is minus the 12,000, but they still get a nice benefit of 8,000 in their tax credit. Here's a second example for 2021. Again, another theoretical company. We'll call this one Fred's Fantastic Car Wash, and they're located in Los Lunas. Now, when Fred's compared Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. Now, in order to qualify in 2021, a greater than 20% decrease must be met. So this business also qualifies for ERTC. Now, Fred's Fantastic Car Wash, they have 10 employees, and each employee is paid $7,000 per quarter, and that includes health insurance benefits. So Q1 2021, Fred paid their employees $70,000, which is the 10 employees times the 7,000 equals 70,000. Now, because in 2021, their qualified wages, what they can get on the tax credit, increased from 50% to 70%. You take 70% this time times 70,000, and they get an ERTC of $49,000 with an annual estimated credit for 2021 of $196,000. So this shows you the differences between 2020 and 2021 and how much improved this tax credit is. They took the number of employees from 100 to 500. They took the gross receipt decrease from 50% to 20%. And they took the wage credit from 50% to 70%. All great improvements in this plan, in this program. So how do you file? If your business was not in existence in 2019, you can use the average quarterly wages that were paid in 2020. Now, there are some exclusions to this. You cannot use the owner's pay or the owner's relative's pay when calculating the wages. And this is still under a little bit of discussion. So please, if you're going to take advantage of this and you want to take advantage of this, work with your CPA. They should be up to date, or your payroll experts, because they should be up to date on the interpretation, because there's constantly reinterpreting and interpreting. And so it's changing constantly. So you need to file to apply this credit using your standard quarterly form, your 941. If you want to file in advance, use Form 7200, advance payment of the employer credit due to COVID-19 form. If you haven't taken advantage of the ERTC in either 2020 or so far in 2021, you can file retroactively using the Form 941-X, which is the adjusted employer's quarterly tax return. Now, how long do I have to file for this tax credit? The latter of 3 years after the original filing, or 2 years from paying the tax. But please get professional guidance and support when filing. There are a lot of nuances in filing for this ERTC. Get advice from your payroll expert, preferably a professional who's well informed on current interpretations and laws. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS is just not giving dollars away. It's looking at the taxpayer submissions, both on the front end and then auditing down the road. So it's always the best practice for the business to provide contemporaneous documentation now when first determining whether they qualify. So to avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document in paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for ERC, and please don't miss out on this terrific tax incentive. So here are a few of the frequently asked questions. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both, as I showed you. Congress in the Consolidation Appropriation Act of 2021 removed the limitation on only claiming one or the other, since they're both payroll focused. PPP will only account for 2.5 times your monthly payroll expenses, and it is meant to be spread out over 6 months. This leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more. Well, the CAA has changed the qualifications so that a reduction of 20% now qualifies. But remember, there's also another way to qualify for the ERC if your business has been subject to a partial or full suspension due to a government order. You can qualify. My business was not shut down during the pandemic. Okay, even a partial suspension ordered by the government, federal, state, or local, of your business could potentially qualify you. A partial shutdown, a disruption in your business, the inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors, and I think all of us are experiencing that now, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify you for the ERC. So the key considerations are due to the government ordered partial or full suspension. Was your business not able to continue its activities in a comparable manner? And did that result in a more than nominal impact on your operations? Remember, the partial or full suspension is an alternative way to qualify, separate from the reduction in gross receipts tax or test. My company was deemed an essential business, so I do not qualify because of the business suspension. Even if your business is deemed essential, an impact or change in your business may still qualify you. For example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Well, it's great news that your company has grown. But if your company has grown during quarantine, but if your company has grown during quarantine and still experienced a full or partial suspension, there are expenses that may qualify. Sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CAA in January of this year, you have the option to look at one quarter prior to determine the qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you're subject to a full or partial suspension, you may qualify regardless. We are in losses or do not have any tax liability. This again is a refundable credit. In practice, this means that any credit overage above tax liability is sent to the business or the taxpayer as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just counting how many heads you have in your office. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for these employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for ERC. One thing I want to emphasize, failure to document and the tax man cometh. If the ERC is the ERC is a refundable tax credit, and it provides wonderful and robust benefits. If you had to draw a tax provision that makes the IRS lie awake at night, we'd all like that to happen. It would be a refundable tax credit involving real dollars. Now, there are a lot of nuances, as I said, in filing for this credit. Make sure you work with a payroll professional to make sure you get the full credit that you are eligible for. So to recap, let's go back. What is the process? Well, Congress votes, they enact laws, and they provide government funding. The IRS, the Small Business Administration, state and local governments, they take that law, they interpret it, and they look at the tax implications. It results in new forms and reporting requirements. CPAs need to follow those interpretations and provide guidance to the taxpayers. That's quite a chain. What are the results? Well, there's confusion, there's restating, there's clarification, there's misguidance. Now, one of the implications of this, and you saw this year, the deadline for the 2020 tax filing, it was moved out to May 17th instead of April 15th for a variety of reasons. And it was part of this confusion. There was a second round of PPP. There were changes to the employee retention credit. They continued to have stay-at-home orders, making it difficult to access taxpayer data, and the IRS was short on staff. Your 2020 and particularly your 2021 taxes are likely going to look a little different than they normally do. This means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So it's paramount that you have accurate and up-to-date set of books, such as your balance sheet and your income statement. Track and categorize all your business expenses on both balance sheet and P&L. Receipts and invoices should be digitally filed and recorded, and take the time because it's well worth the effort to be able to see where your money is going and ensure you'll be able to get the most from your eligible deductions come tax season. I also want to reiterate that please keep in mind this information is changing rapidly and is based on a current understanding of the programs. It can and likely will change. And although we will be monitoring and updating as new information becomes available, please don't rely solely on this presentation for your financial decisions. We encourage you to talk with your lawyers, your CPAs, your payroll experts, and your financial advisors. Make sure that whomever you consult with, if they are up to date on the most recent guidance from the SBA, the IRS, or the US Treasury. It's at this point on the webinar that we're going to go ahead and look at questions. Now, I see people have been using the chat. As I said, we don't monitor the chat. We look particularly at the Q&A. So Leslie, I don't know if you can, if you're online and you can read me the question. Great, thank you.
Okay, so through the chat, it was just some helpful links that I sent over.
Oh, okay. I didn't know it was you. I'm sorry.
It was me. And we are going to be sending you a follow-up email, and it'll have a link to the pre-recorded version of Peggy's webinar today. So look for that. Also, we're going to be sending you the presentation slides. So the question that came in is for a business with no employees who received a PPP, and the owners use the PPP to pay themselves, though the business will not owe taxes on the PPP, will the owners need to report the salary taken as income at the state and federal levels?
I don't feel I've got the knowledge to answer that question directly for you. What I will encourage you to do is talk to your CPA. I would also, I don't know which lender you got your PPP through. I would also talk to them to make sure that you're filling out the form correctly, I would imagine it was probably a smaller PPP loan. So the form is very simple, and hopefully you went through a lender that's using this web approach that the SBA has put out there. But I would prefer that you go to your CPA and ask that specific question for your business.
Absolutely, always great advice. And we're gonna, if you want to wrap it up, I will monitor to see if any other questions come in, but that is the only question we've had right now.
Okay. I want to thank all of you for attending this afternoon. Taxes can be quite a dry topic, and I hope I didn't put you to sleep too much. So what's next? Hopefully this presentation and webinar gave you some tools and some points that you can talk with your CPA or your tax authorities or your attorney, certainly your payroll experts, to ask questions and understand and get the full benefit of the money that is still out there. I also encourage you to act quickly if you haven't and you are eligible for some of these grants, because we don't want to see this money swept up and have you lose a chance to help your business in this awful COVID environment that we've been in. Also, the other thing that you may want to do, because Congress is reviewing this, you may want to contact your local Congress representative and ask them to not put that provision to sweep up those funds on the EIDL program, so that they're still available to small business owners. As Leslie mentioned, you'll receive via email on the presentation, and it will be online. I want to again thank everyone for attending this webinar, and I wish you all the best. And I hope that you get every single penny that you're eligible for. You deserve it. It's been a very, very tough year and a half for us. And again, I thank you, and thank you, Leslie. And I will now close down the webinar.
Okay, sounds good. I want to remind everyone that we do have Peggy for one more time next week. So if you go home and start percolating on all the information that's been coming through for the past hour, feel free to go ahead and sign up for the next presentation. You know, it is a changing environment. And if you think of something, bring them back and we will we'll see if Peggy can hopefully answer those for us. And I want to remind everyone to visit nmsbdc.org, sign up for the no-cost confidential counseling, and visit our other list of webinars, because we have something in all kind of stages for your small business. So thank you, Peggy. As always, such great information, and you guys have a great rest of your week. We'll see you next time. Bye.
Thanks, guys. Bye-bye.